Yeah, so we know we're just going over more fundamental news that the market's always moving up and down. Because of the this war with Ukraine, you know, we have seen price go all the way up to take profit 14 last week, February 24th, 2022. 1974, this is still a yearly high, multi-yearly high. 1974, we haven't seen this high since COVID, the beginning of the pandemic, August 2020. As we already know, U.S. Has frozen all transactions with Russia's central banks. As this is happening more and more every day, gang. So I just want to keep y'all updated with this. As this is happening more and more and more, gang. So that's why we've seen price, head all the way up to 1974. Um, and as we've seen, Russia is in war with Ukraine. As this still is in effect, as Russia is still taking action. As far as the U.S. and the EU targets Russia financial systems, that's putting tries to strike back against, Ukraine globally. U.S. has banned all transactions with Russian central banks, freezing all assets with Russia. United States is concerned. This is why the market is moving the way it's moving. Um, you know, and including Russian banks from SWIFT are frozen as well, as this is impacting the economy. As their Russia is invading Ukraine and Ukraine is going to war. This affects everyone globally. So this is why we see gold head all the way up to take profit 14, 1974 last week. Hasn't been up here since the beginning of COVID, the beginning of this pandemic. And this is summertime coming up right now, but wintertime is right around the corner again. Wintertime is right around the corner. So just being aware of all of this. And let's go back over the news. Let's go back over the news. Price did go to 27 extension, right back down to 1915. Um, I showed you that already, but let's just go back to the news. All right, gang.
Greg, in your note, you also detail how this probably hasn't gone the way that Vladimir Putin has expected thus far. The fight that Ukraine is putting up, the lack of support he's facing on the domestic front. How much longer can Putin pursue this and hold on?
I think for a while longer, Kaylee, but I mean, there were two big humiliations for him. Number one, his army has not performed well. And there's a big piece in this morning's Washington Post quoting a lot of defense experts who were scathing. I mean, they ran out of food, they ran out of fuel, morale is terrible. They're not taking over these cities. And then you look back home in Moscow, and I think he has to know what all of your guests have been saying this morning. Russia faces not a recession, Russia is facing a depression.
So what does that mean in terms of domestic politics as you read it, Greg?
Well, in Russia, I think that, well, as the New York Times said today, the top general seems to be quite skeptical about even talking about a nuclear option. And I think a lot of people high up in Moscow might be thinking of trying to replace him. So I think his standing is a bit more tenuous. Maybe the war goes better for them in the next week or two, but I think that the patriots, the great Ukrainian patriots, have some momentum, and they're going to get a lot more arms in the next week or two.
What about domestically here in the U.S., Greg? The State of the Union tomorrow. Do you think that the American population is happy with the Biden administration and the job they have done on this issue so far?
No, they're not happy with Biden on anything. There's a poll yesterday in the Washington Post, 37% job approval rating. That's appalling for him. So he's got to have a great speech tomorrow, the State of the Union address. But on issue after issue, urban crime, immigration, inflation, it's not an easy stretch right now for Joe Biden.
How does this change domestic US politics, do you think, Greg?
It could. I mean, I suppose you could say that signs that the Ukrainian patriots are prevailing could be a feel-good story for everyone, including Joe Biden. But if it doesn't, I think voters will continue to focus on things like crime and inflation. And that it's awfully hard to see that helping him. In fact, I would say that when you talk to people on Capitol Hill, their view is not only will the Republicans take the House, the issue is by how many seats? Could it be 30 or 35?
Greg, we only have about 30 seconds left, but so far the Biden administration has not sanctioned energy. Inflation has a factor to play there. Do you think they will make that move?
Yeah, that's a good question, Kelly. That's the last shoe to drop. And obviously in Western Europe, that would not be well received because they've been, blackmailed by the Russians. But that's not out of the question. And as Jen Psaki said yesterday, it is still an option.
Paring back of where we see the Federal Reserve move, but we certainly see a paring back in some of the incredible moves we've seen of flight to safety. UK gilts 2-year actually yields bouncing up 25%, 25 basis points. Remember yesterday I was talking about how we had about 28 basis points pulled back on yields. So we're seeing that reversal in bond markets, but the inflation pressure hasn't changed at all, Taylor.
No, and certainly maybe within here, full faith and credit with yields higher. It is a full commitment that inflation is here and it's here to stay, but growth may not be hampered as either. The Federal Reserve really that came out, Tim, and really sort of signaled that they're not so concerned about any sort of economic slowdown, but this is a Federal Reserve that is going to be moving, and yields are going to be moving higher. You see that with now a 2-year yield closing up 19 basis points on the day to 153, 18 basis points on the day. We've climbed our way all the way back to 190 on the 10-year yield. Now, if you did maybe a tweak ago, yeah, we were over 2%, so we're not quite there, but we had come back down to 170s, I believe it was. So we've sort of tried to make our way back up. I think it is firm to say that the path here is yields higher.
Yeah, that was like 2 weeks ago when we got up to like 204, 205, 206. It'll be interesting to see if we get back there as we get a little bit closer to that Fed meeting, particularly in light of the data that we're going to get on Friday here. If you do see a labor market that is as strong as Jay Powell alluded to today in his testimony, then I guess that means the green light is back on for a path, I guess, to rate normalization.
Yeah, what you see is analysts also changing their tune just ever so slightly on what they expect. And look, we know that a lot of people in recent years, in recent months, have been getting the job estimates wrong each and every month. Yeah. But it went last week from 400, big time. Analysts surveyed by Bloomberg.
Do we see
Well, it depends on your definition of that. 400,000 jobs added, that was the estimate last week. It ticked up to 405. Now I believe it's at 415,000. And the revisions, of course, incredibly important too there.
But how much does the job report matter for markets beyond just the intraday basis? Because all the action, all the excitement has been around the CPI report. As the Federal Reserve's focus has shifted from that labor market recovery, it's very strong, very healthy, to inflation. That's the real big problem, and that's where the focus is, it feels like.
Yeah, it felt that, maximum employment, that was no shock of a headline coming from Jay Powell earlier today. We've hit that level. In fact, I thought it was interesting, he talked about immigration being an issue to the labor supply shortage at the moment as well. But really, it's about inflationary pressure, and that's why, with the oil prices where they are, with soft commodities where they are, that's relentless. It's interesting that the stock market still grinds higher, even as the bond market seems to be feeling that, the Fed's going to try and curtail that.
And the signal here that corporations are still confident. We've talked a lot about the buybacks that have been coming in this market, Tim. Some of those, if you think about Chevron, those buybacks are coming when the stock is at a record high. But if you have stocks that are lower, this is confidence that this is the best place to reinvest for these companies, and they're not hoarding cash.
Yeah, the latest buyback we heard about, MGM Resorts announcing a $2 billion share buyback. That is going to do it for our cross-platform coverage of Beyond the Bell on YouTube, on Bloomberg Television, and Bloomberg Radio. Join us tomorrow, same time, same place. This is Bloomberg.
More markets coverage coming right up as we bid farewell to Katie and to Tim. We're going to delve into, what asset managers are thinking about. How are they repricing risk? A conversation with Sarah Williamson, CEO of FCLT Global. It's a non-profit working to rebalance capital markets to support long-term sustainable economic growth. Sarah spent a long time at Wellington as well in alternative asset management. Stick with us. This is Bloomberg.
Again, as we heard, oil is at an all-time high because of this, since 2011. All the commodities are going up, there's a lot of volatility in the market right now because of this war unemployment rates have to do with this. It's the first of the month. So it's a lot of things that have to go on. Why prices are going up and down, and that's it for right now, gang. And I'll keep you updated. All right, gang.